Four stocks I'm thinking of buying this week. Like most of you, I put money to work every single week, and every single week I'm either looking for new investments to buy or increase my overall exposure in some of the stocks I own. There's three market sectors that I believe are providing long-term investors with some great buying opportunities. The first one we're going to take a look at is the ad tech market for sure, the emerging market, and the gaming market. So the four stocks that I'm planning on buying this week all hit this type of market. But don't just take my word for it. So first, I just want to show this consumer spending in apps breaks record levels at $34 billion in quarter two of 2021. This is $7 billion higher than quarter two of 2020, and it's also $2 billion higher than previous quarter. So this is insane. This is telling me right now that just what I was talking about yesterday is still looking pretty good. What are mobile apps are what? Games. And who else spends money there? The ad server. So I do think it's great for the mobile sector and for the ad tech server. But before we go any further, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. And make sure to hit the subscribe button if I'm providing some form of value. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. But the first company we are going to take a look at is Tencent. And some of these stocks I might have mentioned before, but again, right, this is me looking to do my weekly purchases. Not every single week I'm going to find new stocks, right? I don't think that's the best thing. If not, I'll have over 200 positions. Sometimes it's smart to just continue to add onto those investments that you have if they're sitting at great levels. And Tencent is this big digital ecosystem. So they have multiple apps. What did we just see, right? App spending is still crazy. They also own a lot of big games, which we're going to see. Right, they're in the mobile payments, in the digital content in form of video, news, music, literature, in multiple games, in multiple communication and social platforms, utilities, mobile browsers, mobile security, in the cloud, and fintech with the mobile payments, like I mentioned, right? So this is a huge digital ecosystem. Most of you might have not known about them because they mainly work in China, right? So I did mention I believe the emerging markets or international countries right now are giving investors some great buying opportunities. So this is hitting both of best worlds. It's hitting the app world and it's also hitting the emerging and the international company. If we take a look at their most recent earnings, which they reported, total revenue was up 25% compared to the same time last year. I do believe this upcoming quarter will also be strong for the company. So like I mentioned, this is traded over the counter as ticker TCEHY. Right now, it was sitting around $74.19. Year to date, the stock is only up 1.84%. It's pretty quiet. And we can take a look from its 52-week high. The stock is down about 25.14%. This is a huge company. Like I mentioned, they own some big names out there. For example, they own a few percentage of Activision. Even private companies like Epic Games, they own about 40%. Those are the creators of Fortnite. They also own, for example, the creators of League of Legends and so many more. There was also this pretty cool article that just came out June 30th of 2021, where they talk about how Tencent has already invested in 62 video game startups this year, double the number of all of 2020. So I want to say one of the major risks with a company like Tencent is going to be that international, where government is really trying to fight off like the Chinese government. We've seen a lot of news of them attacking like big players. So that's one of the risks that Tencent has, especially as they continue to invest in more and more games. Another thing they do mention is Tencent, they kind of haven't really bought much here in the United States. Most of the studios they are buying are either in China or international, but right now we all know that US and China tension is kind of preventing them from buying a lot of games here. So again, this is more if you want to get that international risk, not international risk, international exposure, but you have to remember it comes with some risk. So international exposure and risk doesn't scare me off. It just tells me, hey, Jose, if you want to open up a position or if you want to have a position, just remember not to go too big. Another thing is Tencent, when they buy these companies, they don't really kind of rebrand them. They kind of let them do their own thing. So they call it like silent investing, where you just own a good portion, you kind of help them become a better company, but they're still kind of individually their own. So that helps a lot with like regulators and allows them to continue to make all these crazy purchases. If we take a look at their fundamentals, this is a big company, but it's still expected to grow 15.5% on average. This is one with profitable earnings, positive cash flow from operations. Like I said, right, this is very, very big. If we take a look at their market cap, it's $703 billion. But they own good, they're one of the biggest video game companies out there. If we take a look at their financial health, they have plenty of cash. They also have plenty, about almost a 1-to-1 ratio of cash to debt. This doesn't scare me off, especially since they have been profitable for such a long time and positive in cash flow from operations. All right, so that was the first market, and that hit both the gaming and the emerging markets to say. The second and the third company are hitting the overall ad tech market. This one, the first one we're going to take a look at, I actually did a video earlier this morning on it. If you want to do a little more research on it, feel free to check that video out. Here, I'm just going to do a quick overview. Digital Turbine. This one is not in my portfolio right now, but I have been talking about digital apps. You might know it as apps for a long time. Some of my great viewers, they're mentioning that they got into this stock as low as $17, some in lower teens when I first talked about this video about a year and a half ago or so. So Digital Turbine Ad Tech, they do both, like I mentioned yesterday, they do both. They work for advertisers and publishers, but they also do services for operators and device manufacturers and OEMs. Great name for the overall ad tech, and if one wants to get exposure. Yesterday, the stock took a big dive, about 12.75% yesterday, on no major news. There have been some news on Twitter of people kind of finding out that it might have been due to a misunderstanding of some changes, but there hasn't really been any concrete reason for this big drop. After hours, the stock is already up 1.5%. It could be that overreaction, and I do believe this overreaction could be giving investors long-term buying opportunities. Like I mentioned, I don't have this in my portfolio right now, but I am thinking of adding on to it this week. If when my money comes in on my weekly basis, I am ready, and it is still around these prices. We take a look from its 52-week high closing, the stock is down about 28%. I do believe great buying opportunity. If we just do a quick recap, they did in their most recent earnings, which they presented June 1st of 2021, huge revenue growth, 142% quarter compared to the same time last year, and for the full year of 2021 they saw 126% year-over-year revenue growth. So strong growth monster. This is also a company that's profitable in GAAP earnings, and they are being very aggressive with acquisitions. In May 25th of 2021 they made an acquisition of Fiverr. In 2029, and that's another ad tech company. All these acquisitions that they're doing are more ad tech based. In April 29th of 2021, they also finished their completion of Ad Colony. This overall growth in company acquisitions is really pushing the fundamentals in the future, and that's why digital apps is expected to grow at crazy levels, 31.5% on average for the next 2 to 5 years. They are actually GAAP profitable in earnings, and they are also positive in cash flow from operations. This is something I really do enjoy. If we take a look, the only thing I'm not too happy about is they have about $30 million in cash, about $15 million in debt. I do believe they should have a little bit more cash at hands, but they are profitable and positive in cash flow from operations. I would foresee this one and the other one we're going to take a look at, that they might do some form of offering in the future just to build up that cash. And if I was an investor of apps, or the other one I'm going to take a look at, it wouldn't really get me annoyed. I would really want them to build up this balance sheet at the moment. Next, the third company we're going to take a look at is Magnite. And this is the world's largest independent sell-side ad platform. Again, another ad tech company. And they will help companies win across every channel, every format, and on your terms. So Magnite right now is traded under MGNI. The stock was down about 3.26%. I'm going to say it might have been some form of reaction to how apps was doing. That again, I do believe could be giving investors a nice buying opportunity for the long term of things. Right now, it is down about 45.6% from its all-time 52-week high, closing, and it currently has a market cap of $4.3 billion. If we take a look, Magnite is not slowing down. Very similar to apps, they are acquiring a lot of companies. Here in July 1st of 2021, Magnite acquires SpringServe, a leader in CTV ad serving technology. Now, if we take a look in April 30th of 2021, they also closed SpotX acquisition, which now they become the largest independent of CTV and video ad platform. They have some really big clients included in that acquisition, and that is pretty impressive if you guys look at the names there. If we take a look at their most recent earnings, quarter revenue was up 67% compared to the same time last year. They are profitable in adjusted EBITDA, which is great news. Unfortunately, they're not profitable in GAAP earnings or positive in cash flow from operations. They are expected to be there within the next 12 months, so that's great news. Unfortunately, very similar to Digital Turbine, Magnite also has, I want to say, not the strongest balance sheet. They are net cash flow positive, similar, $468 million of cash and short-term investments and $388 million in debt. So they have almost $100 million more in cash. But after all these acquisitions, I wonder how all this is going to change. And I do believe this is another one that might have the chance of having an offering sometime in the near future to build up that cash. I wouldn't think it's a bad thing, but I do believe it would add some volatility to the stock. Again, all these stocks I want to say are making sense, especially after this consumer report about the overall spending in apps has broke records. The final company we are going to take a look at is Activision. Again, some of these are repeats because I do believe this market is continuing to give us investors nice buying opportunities. So Activision, they are one of the leaders in the games right now. You guys might know them from World of Warcraft, Call of Duty, Diablo, Candy Crush, Hearthstone, Overwatch. They have everything from mobile games, PC games, to console gaming. And they are really focusing on that mobile platform, right? Call of Duty Mobile is doing amazing. Candy Crush is breaking records for them. So Activision right now is about $94.27. We can see year to date, it's barely moved, about 4.86% from its 52-week closing. The stock is down about 9.19%. This is a very big company, right? $73.25 billion. Activision, like I mentioned, huge revenue growth, 72% on their Activision segment compared to the same time last year. Their King segment revenue reached new levels. This is mainly their mobile gamings, right? And mobile gamings are doing amazing, grew 22% compared to the same time last year. So overall, this is still a company that's focusing very, very heavy on their main franchises. So if we take a look at Activision, I didn't open them up, but they are still expected to grow at strong levels. Future growth is expected to be 8.4% on average for the next 3 to 5 years. I wouldn't say this is pretty strong for a gaming company. They are profitable and they are positive in cash flow from operations. If we take a look at their financial health, they have plenty of cash, $9.5 billion compared to $3.3 billion in debt. So fundamentally, I do think they are also in a very, very great place right now. Now I want to take a quick look at technicals. Make sure that these stocks are not overextended, and I'm pretty sure they're not. That's why I'm talking about them. So Tencent, right off the bat, not overextended, sitting next to its moving averages. Apps, nice. After that pull down, is sitting again nice near its short-term and medium-term moving average, not overextended. Same with Magnite and Activision. They're all the same. Activision might be the only one that's not that close to its medium-term moving average. This doesn't say that the stock price can't continue to go down, right? Risk is still there. I just do believe a good portion of the risk has been eliminated. Now, if we take a look at valuation metrics, I'm taking a look at Activision price to sales ratio. It hasn't really moved since September, I want to say, of September of 2020, maybe even August of 2020. And I want to say, during COVID, everybody was excited about gaming stocks, right? Because everybody was playing games and they believed they were going to do amazing. I still believe they are going to do amazing, and they are different companies now. The mobile world is still growing, and there's a lot of great margins there. So Activision's been pretty quiet for at least 10 months right now. Magnite and apps, if we take a look at forward price to sales ratio right now, they are a lot higher than they were earlier before. Again, I do believe the streaming market is a whole different world compared to where it was at before. It is cheaper than where it was most of 2021, early 2021. So undervalued compared to where it's been in the recent past. But again, I do believe this is a market that has changed dramatically in the past few months due to COVID, right? Again, I do believe all of these are giving us long-term investors a nice buying opportunity for long-term holds, right? The ad tech market, the emerging market, and the gaming market. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.